Abhilash Narayan is now joining us, Senior Investment Strategist, Group Wealth Management at Standard Chartered Bank. Abhilash, good to have you with us here. Thank you very much for your time. How's the market looking now, Abhilash, after the rally that we've had? Do you think we will get that push higher to all-time highs here in India on the indices? And will it continue, going up? Will this move be uninterrupted, as some are saying, all the way to about 20,000, which is about 6-7% from where we are?
I think if you look at the Indian markets and global markets in general, we've seen a big rally in equities. And this is something we've been highlighting in the beginning of May, that there's a possibility of a melt up in equities. And we've seen that happen. Now, from our perspective, we think that the rally is starting to look stretched. So if you look at some of the momentum indicators, if you look at some of the proprietary indicators that we've developed, equity markets are starting to look stretched. So there is a possibility that we do see a consolidation, not only in Indian markets, but also global equities. And in fact, we think that, if you look at US equities, we think that markets are starting to look toppish. That's close to a bull market right now, from lows we've seen last year. And given the soft economic backdrop, we think that that's a bit too much. So we've actually turned underweight on US equities just last Friday.
Okay, that's interesting. So last Friday, you turned underweight on US equities. Do you feel the same about the Indian markets as well, that perhaps they've topped out in the near term? Because in the last 3 or 4 days, the market has been sort of struggling to get to those all-time highs for whatever reason. How are you feeling now?
Well, we think that there is more upside to Indian equities over the next 6 to 12 months. So we think that Indian equities should definitely outperform global equities going ahead. And, the underlying drivers are well known. We think that earnings growth will remain robust. So we are looking at over 15% earnings growth for FY24. Valuations, while not cheap from an absolute perspective, have eased over the past 6 months or so. So that's supportive. And, while we have seen FII outflows over the last 3 days, if we zoom out a bit, since the start of this quarter, we have seen substantial inflows from foreign investors. And part of that is rotation out of China into other emerging markets, including India. So we think that, the FII inflows could continue over the next 2 or 3 months at least, and that could be a tailwind for Indian equities. So yes, around 18,600 for Nifty, there could be a bit of resistance. We could see a bit of consolidation, but we should eventually break higher above that.
All right. Hi, Abhilash. Good morning. Abhilash, the big cue in the coming week will be from the central bank here in India, the RBI. What's your expectation out there? We are working with a pause. And also from the Fed, do you believe that they have one more rate hike in store, looking at the data that's come out, or do you think they'll pause as well?
Well, for the RBI, we have the view that RBI will remain on pause. So obviously, if you look at the CPI data that came out, a few weeks back, we saw CPI dip to 4.7%. But we think most of that was due to, the base effects. So maybe in a couple of months, we should see CPI go back above 5%, given that some of those base effects will fade. So we think that RBI will remain on hold at least till later part of the year. As far as the Fed is concerned, we are of the view that the Fed will remain on pause. So obviously markets have priced in an expectation of maybe one more rate hike by July. But if you look at the latest services PMI data that came out overnight, that was relatively weak. It's important to remember that services sector is over 70% of US economy, and that is flirting with contraction. In fact, if you zoom into the services PMI data, the employment sub-index actually went into contractionary territory. So obviously we need to watch out for the CPI data next week, but we think that the softness in services sector will mean that the Fed remains on pause in the upcoming meeting next week.
So this upside to Indian equities that you're looking at in the next 12 to 18 months, and you're talking about a 15% earnings growth, correct? Where do you see the earnings pickup come through from? Which are the pockets, which are the sectors that you like now?
So we think that some of the more pro-cyclical sectors are the ones that we think have more upside. So if you look at banking sector, we think that that's in a great shape. The balance sheets are quite strong. NPL ratios are quite low. And we think that the strong loan growth that we have been seeing will mean that the banking sector continues to deliver healthy returns. The other sector that we like is industrial sector at an aggregate level. So obviously in the budget that was announced a few months back, we saw a lot of policy announcements come through. And we think that most of the infrastructure spending is going to be of good quality, which will, be supportive for the economy in the long run. So the infrastructure and industrial sector could see actually earnings growth in excess of 30% if we look at the overall sector.
All right. We'll leave it at that. Thanks a lot, Abhilash, for joining in, and have a great year. Have a great day. And of course, we'll chat with you again very soon. That's the word coming in from Standard Chartered. They are underweight on US equities, but they still like Indian equities with a long-term perspective. Thank God for the bulls here. 12 to 18 months is the time horizon that they're looking at, and they like the pro-cyclical sectors. Let's slip into a quick break. Our entire team will be joining in just a while to help us with the top 10 list of stocks.